Good morning, everybody. Welcome to Market Musings with Watanabe. My name is Princess Krasta, and on behalf of entire Watanabe team, we wish each one of you a very happy Navratri, and I hope you all had a lovely week. So, without further ado, let's quickly move towards the market highlights. So today we are going to present you a very interesting statistics and trading idea. So the idea here is this, that if you short Fin Nifty at the money put and call to the nearest weekly, nearest 50, that is a short straddle 1 day prior to the expiry. So the stats here says that since April 23 onwards, we had 27 such instances, out of which 21 were wins, which is around 78% of winning. The average expectation here is 31 points. The maximum loss here was 182 points, which was on 26th of June. That was because of short call. And if we see that if you would have used this idea of, or if you would have played around this idea, you would have made 833 points versus the benchmark of 1436. That's roughly around 58 points. 58%. 1 by p-value is 62, which shows that this data is statistically significant. And the profit factor here is 2.65, which says that for every $1 you lost, you would have made $2.65. And if we see that from April till October, roughly around, so 2 out of 7 months were in losses. The highest gains were in July, followed by August. So yeah, that's the stats presented to you by Options IQ. Do let us know if you are taking this trade. Moving towards the global indices, we can see that US futures is higher after cash market ends largely lower on Friday. US market ends largely lower on Friday. Nasdaq slips by more than 1%. GIFT Nifty is lower. That indicates a muted start for the Indian market. Moving towards the commodity section, we can see that the price of gold and silver is moving up, whereas Brent crude is at $87 per barrel. In FI DI data, we can see that DIs have sold in cash market and FIs have bought in cash market. Whereas FI and derivatives, they have gone short in index futures and options. And overall, there is a selling of around 11,545 crores. So today, we are presenting to you this country risk map. So first, let us understand what is a country risk. So basically, investment in other countries are exposed to country risks that go beyond but ultimately influence the long-term performance of stocks, bonds, or any other financial assets. Considering these factors, the rewarding of investing in international companies may come with macroeconomics and country-specific risk. So to get a clear picture, this was being put up by Mr. Ashwath Damodaran at New York University. And he also has covered up political risk, legal risk, and economic risk. So moving towards our next slide, we can see these are the countries with highest country risk. That includes Belarus, Lebanon, Venezuela, Sudan, and Syria. So Belarus is basically because of Russian military forces continue to operate, and Venezuela, we all know that it has faced hyperinflation and endemic corruption for many years. Whereas if we move towards the countries with low risk, we can see US, Singapore, Sweden, New Zealand, Norway, and so on. So these countries are basically due to the factors such as AAA rated government bonds, low corruption, and strong property rights protection. So that's it in market musings from my side. Or don't forget to like, share, and subscribe, and have a good day.